Hello, today is the 1st of March 2012. It is a Thursday. Welcome to this morning's video. I hope this is my only video for today. Meaning, I hope I'm kind of wrong, and I'll explain that within this video. Because then everything will be working just standard, I guess. With that being said, this is the inflation-adjusted chart. Monthly average price for February was $34.17. Obviously, still in an uptrend. The situation within this is as long as you buy this and it stays flat from where you bought it, that means your purchasing power stayed afloat. So let's now move on to the monthly chart, which was the least volatile month in the last 6 months and the third least volatile month in the last year and a half, and that doesn't sound right, but just a little small blip in the radar for the month. Of course, the majority of the move happened yesterday as it went to the top part of the range to pretty much the bottom part in just one day. Currently right now at 34.79, and it's about 34.90 as I'm doing this. The price action is right at the 18 moving average of closes, 34.42. It's within this band. That's a consolidation band from this significant gain. And that range is from 31 and 38, we'll call it. Daily chart. And we're also within the range from just this small breakout because it broke it from here. So there's a big potential that this is a little bit of a failed move. And it's only potential right now because I know today I would be, if I was playing the casino style game and I want to make a wager on the price action for what I would expect, I'd be looking for some bets to go lower at about 5-to-1 odds, 4-to-1, 6-to-1, wherever they pay me, on a significant breakout down to the lower end of the 34 level. 34.21 was a level I seen on an online casino earlier today as a possibility. But as I'm watching this after 9:30, I'm like, why is it not going down? So quite frankly, I don't know what to expect because I expected some further capitulation this morning, and that hasn't happened as of yet. Let's now move this on to the quarter day chart. And when you look at the size of these moves, we've had a significant gain here, a significant gain here, you have one in here. You really had 4 6-hour periods in which the markets decided to have a nice little gain, and it pretty much all obliviated, at least the last two, in just one session or about an hour and a half time frame. Now what's major is this support level at 34.41, or where this previous level of resistance was in play. On the first major 10% down move, we noticed that it hit this support level and it came off of it. Now what happened was it came down to this line again and it found support pretty much exactly at 34.40. Then it rallied up here, and then it came back down here, then it closed in there. So it really looked pretty volatile. This green candle stayed within the range, so did this red one, and the current one, again finding support, still hasn't gotten above this little area in here, but it's trapped within this neutral sideways range as of now. Breaking down below this has the opportunity for a major failed move where you could have yet another decent sized red candle that brings us, I don't know where. I'm just saying that the whole fallout from this, or what the reaction from this, is still unclear for how this is going to come into play. I do expect at some point in the future, and I don't think it's going to be today, next week, or any time in the near future, that we will have significant gains. But before we do, they're going to most likely try to scare the living what out of you. It's just seems to be the nature of the beast. And this is the type of setup that I'd be looking for them to scare you originally. Get it up, thinking, okay, everything's all good, and then boom, this is a scare tactic that's going to come into play. Whether it's the time it's going to happen, I doubt it. After all, if I were to make a casino wager, I'd be wagering that we would have a close somewhere down here with great odds. Another way I might be looking is for it to get back up towards this band somewhere, and then, yeah, I'm going to bet for it to go lower, aka shorting the market. But that, again, is the paper game, and quite frankly, whether that would win or not, I don't know. And at this point, since I'm not making the wager, I really wouldn't care too much either way. But let's take a look at an older chart, which will take us back to May of 2011, which was where the top was. Now, yesterday it was 10% from top to bottom, and I want to take a look at this little candle in here. It was 9% from top to bottom, or bottom to top, though not quite as big. And what occurred was the following day it had some more selling, almost as volatile, but the movements coming in were really volatile, unlike today. It was in a nice up bull market. In comparison today, after all, we've seen a market pretty much double in the time frame of about February, March, April, about 3 months or so. And then after it came back up to this point, it might have been telling us, hey, wait a second, this was a failed move, and we have this monstrous major level of 50. So with that being said, if this is a failed move, then maybe we'll have this fast move to the upside. But no, this ended up being the failed move, and it's more in particular because of the Fibonacci retracement and moving this down to the shorter term time frame. It was showing confirmation that it wanted to continue to go higher, which never did happen, and therefore it then created a major selling move. A lot of these moves, if not pretty much all of them, are because of the major bankers, the one with the big control of the situation. Whatever it is they want to do, that they're able to do, is what they're going to do. And that's the end of this video. Thank you for tuning in, and have yourself a great day. Bye-bye.